What are the country's top CEOs doing to build extraordinary teams and cultures who thrive even during a pandemic? You're about to take a deep dive into the minds of wildly successful C-suite leaders who are evolving the way that we work in the 21st century. Welcome to this special edition of How to Be Mesmerizing. Hey everybody, it's Tim Shurr. Welcome to How to Be Mesmerizing and our special CEO Secrets series. I've got an incredible guest with us today. Dan Macklin is on the show. Dan, welcome to the program.
Thank you for having me, Tim.
It is a pleasure to have you. So just to give a quick bio, Dan is CEO of Salary Finance. They partner with employers to offer their staff employee benefits that help them improve their lives by improving their finances. Their goal is to make the lives of millions of people less stressful, more productive, and much happier by teaching financial education and showing people how to lower debt, how to increase your credit score. Everybody knows that the money, the love of, how do they say it? Money is the root of all evil. I would say no. I would say stress is the root of all evil, and the worry about money is what causes so much of the unhappiness and low productivity and stressors that businesses experience as well. And so I'm really excited to have you here to talk about this. So Dan, before launching Salary Finance, you actually co-founded SoFi, which was the largest online lender to focus on helping students refinance their loans so that they could get out of debt faster. So what drew you to wanting to help students with their student loan debt?
Yeah, thanks, Tim. We're back in 2010 now. So I was at Stanford Business School, having never lived in the US before. And when I came here, I was frankly horrified really at the level of student debt that within the country, including at a really good institution like Stanford. So just around me among classmates, and then as I read more the country at large, it was just very obvious that there was a lot of debt, around 40 million people at the time, and that's only ticked up a little bit since then. So yeah, a lot of debt, a lot of student debt, and very few options for people. So the government loans were about 90% of the market. They were good to take while you were at school because they had certain protections around them if you did certain degrees. But for many people, they graduated and then they were paying these things back for 10 or 15 years with no real option to refinance, almost irrespective of their credit score, their income, anything. It was just a very strange market where anyone who's got a mortgage knows that, every so often you look around and see what else is out there because the chances are, particularly if the interest rates are low during those years, that you can save money. But student loans just stuck at this really high interest rate. So long story short, we came up with an idea for a company that offered a better solution to people with student debt, allowed them to refinance that debt at much lower rates. So we were saving people tens of thousands of dollars because people were refinancing, I think on average, $70,000 thinking back now. These were typically people that had been to graduate school as well as undergrad and just had a lot of debt. So a big need, a big solution, and a big market.
Yeah, well, thank goodness you did that, because I was one of those students that was locked in with a 10% interest rate on student loans. And, I had about $40,000 and I just could never, get it down because with 10%, it felt like an interest only loan. And one of my happiest days in my life, when I think about it, is I wrote a $30,000 check and paid off that loan because otherwise I would still be paying it.
And that's great. I'm glad you're able to, Tim. But many people don't have that right or that option. So the difference between a 10% rate like that and say a 3 or 4% rate that SoFi would offer is amazing. You then chip into that principle, and I'm still amazed by compounded interest, how it works. Like I just don't think it's instinctive enough, and people don't quite get it enough. And if the difference between 6 and 5% is massive, so yeah, we're really playing into that, allowing people maybe like yourself to get out of debt quicker and move on with their lives.
Yeah, for sure. For sure. So COVID revealed that, or perhaps emphasized that too many employees are just one paycheck away from being broke. And that you decided to work with employers to provide financial education that would help address people's poor money habits. So tell us a little bit about that.
Yeah, it's a tough situation. So to go from SoFi to Salary Finance, at SoFi I was looking after business development, and a large piece of that was going to work with big employers around the country who had employees at volume with student debt, and we would help their employees with that student debt. So I saw through that employers were a really amazing channel or way to get to lots of people and to get your message as a company to lots of people. Mm-hmm. Because people trust their employer, and they should trust their employer. Generally, they trust their employer more than they trust the media or the government. And also critically, an employer knows how much you get paid, and there's all kind of things that can help as well to make sure the right financial products get to you.
Yeah.
So yeah, we realized that beyond student loans, and I'm now moving into salary finance, the company I work for now, where we offer products that help people with a much broader range of financial issues and types of debt other than just student loan debt. We realized that as you said in your question, many people are one paycheck away from being broke. And put another way, half the country doesn't have anything put by in savings. So any incident or action in their life that they weren't anticipating that costs money, they're not prepared for. So that could be a couple of flat tires on your car, that could be a broken water heater at home, that could be braces for your kids' teeth or whatever. All of these things are many hundreds of dollars, if not thousands of dollars. And if you don't have that and you have that need all of a sudden, where do you get it from? And the sad truth is that too many people have to rely on really, really expensive and exploitative options out there, such as the payday loan industry. Those payday loans that are out there are charging 400, 500% a year. I think the average is 391%. There was a study that JP Morgan did, I think. And of course, it's not advertised in that way. It's advertised as borrow $100 and pay us back $120 at the end of the week. But $20 for a week, 20% for a week, when you kind of push that out, it ends up being in the hundreds of percent. So there are lots of people in America with very few options, very poor options. And COVID just kind of, while it was kind of okay for many people financially, you may have actually saved money because you're spending less money and still earning. For many people in America, that wasn't the case, and they're now, in a worse position than they were.
Yeah. When you told me the other day that there were more payday loans than McDonald's on the street, that's very scary, because I just feel like those payday loans are kind of preying on people who are already financially struggling.
It is, and it's a tough business, because sometimes if I don't get $100 today, I'm going to get my heating cut off by the utility company and my family's going to freeze. So, people are in many cases in extreme situations. So maybe they would be willing to pay $20 of interest for a week, but it's too easy to borrow money from those places. There's too many of them, and it's too mainstream now. So people end up using them not just for real emergencies, but just for general day-to-day getting by stuff. And employers of America need to they are waking up to the fact that their employees are going to these places. These payday loan shops that are on every street corner around the country are not there being empty. Like, people are using them. And as an employer, your employees are among those people using them. So I think it's a rude awakening, but yeah, that it's not a good solution for employees to be using.
Yeah. Now, one of the things that I really enjoyed in our last conversation, and that's why I wanted you on the show so bad, is because of this. So although helping people feels good, your company helps employers to realize that it's actually more profitable to help employees become financially fit, because it lowers their stress levels and increases productivity. So it's not just because it's altruistic, it actually increases your bottom line. So tell us about that, Dan.
Yeah, I mean, I think when you think about it, it's common sense, but maybe it's not obvious. So if you're an employee and you are having to borrow from payday lenders and you need to pay that money back on Friday of this week, and you don't know where you're going to get that money from, and it's now Wednesday or Thursday, and you're thinking, how am I going to do this? You are not concentrating on your job when you're in the office or the factory or wherever you are. Mm-hmm. You are at least to some degree thinking about, how am I going to pay that thing back on Friday? Yep. I need to knock off work early to go and take another loan from someone else, or I need to call my relative and see if they'll lend me the money. I need to, whatever it is, or I can't afford the babysitter tonight for my kids, so I'm going to have to leave work early. All of these things that if I wasn't financially stressed, I'm not having to think about, and they're distracting me from work. So we do a big study every year where we question about 3,000 American employees around the country, and we ask them one basic question up front: are you stressed about money? And then we ask them a whole load of other questions. And when you compare the answers to the people who are stressed about money compared with those who are not stressed about money, it's really quite stark and frightening in many respects. So I'm just going to make sure I use the right numbers, but it's roughly 50-50. So 50 are stressed about money, 50% are not stressed about money. But if you look at the people who are stressed about money, they lose more hours per week on money worries, just being distracted at work. They take more than 1.5 sick days extra a year. Like, we asked them, how many sick days did you take this year? And there's always a correlation there. And then this is where it really gets horrible. They're 9 times more likely to say that it affects the quality of their work. This is self-reported. And they're 10 times more likely not to finish tasks. They're 9 times more likely to have troubled relationships with their colleagues. So all of these things are, impacting their productivity at work. And then when you link it to mental health, they're 7 times more likely to say that they suffer from depression, and 5 times more likely to have suicidal thoughts than those who aren't stressed about money. So physical health, mental health, financial health, all of these things are really intertwined. And there's just, if you're stressed about money, you're not going to perform well at work in general. So that's why employers need to pay attention.
Yeah. I mean, very well said. That was brilliant. I have wasted many hours in my life, when I look back worrying about money. And I remember hearing that the number one argument couples have is over money, right? Yeah. And so it's because that's our security for so many people. I remember working with some people that were very wealthy, that because of a turn of events in the economy or with their stocks or something else happened and they lost it, and they felt like they weren't even worth anything anymore because they didn't have all that money, even though they were still themselves and they still had their family and they still had their knowledge and their wisdom. But because they felt like they lost that either security or that status, they felt like they were nothing. And so, it really is a powerful force, and we have to make sure that we take charge of it. And the best way is through education, and that's what your company provides. So providing employees with more education, whether it be financial or emotional or for health reasons, it also lowers turnover and increases retention. So why is that? That might also seem obvious, but common sense isn't always common. So do you know why it increases in retention and how much money companies are actually saving?
Yeah, I mean, it's basically because for all of the things that I mentioned, if you are stressed about money, you want to fix that situation. So one solution is to earn more money. I'm earning $30,000 a year. I'm going to look for a job that pays me $35,000 a year. And that extra $5,000 is going to cure my money problems. The reality is it's probably more complicated than that, but that's what people are seeking. So if I'm stressed about money, I've got more motivation as an employee to be looking for another job, to be searching for that extra few $1,000s a year, or that extra few dollars an hour, or even that extra few cents an hour. It comes down to that kind of level of granularity where people are just chasing a higher number because they need it. And whether I enjoy my job today or don't enjoy my job today is almost irrelevant. I just need to go and try and get 10% more somewhere else because I've got debts and I've got money problems and I've got money issues. So if you have a workforce who's financially stressed, they are more likely to be looking for a new job. I'm checking the numbers here. Yeah, it's just over twice as likely to be looking for a new job, which maybe doesn't sound that much, but basically twice as many people leaving, which means you've got to hire twice as many people to replace them. You've got to spend twice as much on recruitment, on onboarding, and gaps in between people leaving, people arriving. All that stuff in today's world, as we record this now, hiring is difficult, really difficult, and you don't want to add to that by encouraging people to leave, or more people to leave. So from a recruitment perspective and from a hiring perspective, if you can help people reduce their financial stress, you're going to help yourself manage that recruitment issue that so many companies are facing today.
Absolutely. I've been talking with friends about how to recruit really great talent, and the ways they're trying to do it besides just websites and posting and stuff like that. And one method was, referral fees. If you refer somebody in a company, and we hire them, we're going to give you, and I was surprised by the numbers. Some people are like, we're going to give you, $3,000 or $4,000. And then someone else I talked to said, well, we've given $20,000 and $30,000 depending on who we're hiring. And I'm like, oh my gosh, right? And that's just a referral fee. So it can cost 5-6 figures or more depending on the size of your organization. It's so much easier to just keep the people you have.
Yeah, exactly. Yeah. I mean, it's expensive to hire. So let's keep that problem as small as we can, and try and keep people within the company, of course, assuming they're doing a good job, but you don't want good people leaving if you can avoid it.
Right. And also the education is so important, because you give someone who has trouble with managing money more money, and what do? They just spend more money, or they buy more expensive stuff, and now they're just broke at a higher level.
Well, that's what I alluded to before. So in many respects, the search for a higher salary is very logical, but it doesn't always solve everything, because the same issues exist. And a lot of this comes back to credit score. So if I'm someone with a bad credit score, for maybe in the past, I didn't, I got behind on some of my debts, I'm in the 400s or the 500s, then even if I'm earning a few more $1,000s a year, whenever I need to borrow, whether that's for a mortgage, if I'm lucky enough to be able to buy a home, or for a car, which I may need to get to work, or for anything, quite frankly, my interest rate is going to be massively influenced, to say the least, by my credit score. So just because I'm earning $2,000 more a year as a result of this new job, if my credit score is still where it is, I'm still paying the same on my debts, in terms of interest rates, very high interest rates. And that's when very often I get stuck with payday lenders, because the traditional banking system just won't help people with credit scores in the 400s and 500s. So it's really hard to break out of that cycle, even with a slightly higher salary. My credit score is the thing that can really propel me, and if that stays where it is, then I'm in trouble. And that's kind of where one of the things that Salary Finance does is offer affordable loans through the payroll system. So we lend to people, and then they pay it back through deductions from the payroll system. And what that means is, and we report those to the credit agencies, which is a great thing, because people then get the benefit of paying back their debts. Whereas when you go and borrow from a payday lender, you can pay the loan back, but they don't report to the credit agencies. So your credit stays at the same level, which means the next time you need money, you still have to go to the payday lender, and you're stuck in this horrible cycle. So we allow people to break out of that. Average credit score improvements of 43 points from the time I take the loan to the time I pay it off. And that really helps me move up the ladder. And it's a powerful thing.
Yeah, for sure. There are, tools and formulas that are successful. And one you just shared right there, that a lot of people would not know that, and they would not realize that when you're reporting those payments and paying off your debt, that it increases your credit score. And so it's just, you don't know what you don't know. And so that's why the education is so valuable.
Yep.
So if a CEO asks, is this really our job or our role to help people with their finances? How do you reply to that?
I wouldn't say it's their job. I wouldn't say it's an obligation, but I would say it's the right thing to do for as you mentioned, Tim, it's the right thing to do for your employees, but it's also, as you mentioned, the right thing to do for the bottom line. So the stuff we spoke about earlier about recruitment, we believe that 13 to 18% of salary costs are being wasted because of the people who are financially stressed. So of course, it's not as simple as waving a magic wand and making all those money worries go away. But if you can take a dent, or you can make a dent in those financial worries of your employees, purely for selfish financial reasons, there's a benefit, there's an upside there. And maybe this is a silly example, but employers spend money in the workplace to make it a comfortable place to work and to make their employees give them the environment in which they can do a good job, it doesn't make any sense to just ignore anything that is outside the four walls of the office or the factory. It doesn't make any sense. Like, if you're going to spend time putting a nice carpet in and and giving people desks and chairs that are decently comfortable so that they can be productive, why stop at the four walls of the office or the factory? And why not think, well, how can we help them in their other lives that is going to help them to be more productive?
That's right. And help them in these walls, in our mind, because that's where, they're having these experiences in their own mind. Yeah, very good. So when people are equipped to manage their money more effectively and companies set up programs and systems to help them with this, which I think is essential, it allows people to focus on enjoying their lives rather than constantly worrying about survival. So if a company says, well, we don't really have time for this, or we don't know how to set this up, or we're worrying about masks or vaccines or all these other things, that's kind of where you step in, right? To help out. They don't have to know all this stuff. You've got that set up for them.
Yeah, I think employers have a tough time always, but especially at the moment, with all the issues around vaccine mandates and whether people should be wearing masks, and maybe their customers can't interact in the same way as they normally do, or demand and supply chain issues. All of these things are weird at the moment. So there's a lot of pressure on employers, but that's, there's always something going on. People are always busy. So it's silly to put your head in the sand and just kind of ignore this and ignore the fact that many of your employees are financially stressed. And as you say, Tim, there are easy ways to address some of this. I think sometimes employers get hung up on wanting to implement the perfect all-round solution that helps every employee with every financial problem that they may have. Mm-hmm. And the truth is that's extremely hard to do, because you have employers at one end of the scale who are just scraping by every day or every week. You have employees at the other end who may be doing completely fine, and they're all more about optimizing their retirement so they can, retire a little bit more comfortably, or very comfortably, or very, very comfortably. And those two ends of that spectrum need different things. So I think sometimes employers get hung up on, well, okay, we can introduce this benefit, but it's only going to help 20% of our employees. We want something that helps 100% of people, arguably like health insurance. There isn't really that kind of thing in money, because for money, everyone's needs are different. So I think once employers get their head around the fact that it's okay to have stuff that doesn't necessarily help everyone, then I think they overcome that kind of fear and they get moving and they start introducing benefits that really, really can be useful. Voluntary benefits. Nothing here is necessary for an employee to take or obligatory for an employee to take. It's voluntary. And I think that's the key word.
Yeah. It's just another perk, that shows that you care about your people. And some people will take you up on that and others won't. But the people who really need it really appreciate it, because otherwise they're going to be in an endless circle, and never get out of debt. So very valuable. A lot of businesses in other countries have been doing this, right, and supporting their people. And so we seem in this state in this country to be behind that curve a little bit in a lot of ways. And so with this or with healthcare and things like that. So do you see the trends where more businesses are taking this opportunity to help their employees in this way?
Yeah, there's definitely a trend in that direction. So some of that's relating to a product that's called early wage access, where it allows an employee to typically may get paid every 2 weeks rather than waiting until the 15th and 30th of the month or whatever those dates are to access their money a few days ahead of payday when they need it. And I think what that's shown, and to some extent the gig economy, the rise of Uber and DoorDash and Lyft and all these other companies where you get basically paid as you earn it, it's increased the pressure on the more traditional lenders to change and to not withhold salary from people and only give it to you every 2 weeks, or even worse, as it is in the UK where I'm from, every month. People through those gig economy jobs have got used to working 5 hours today and then seeing it in their bank account that evening. And that's the way that the world is moving towards, real-time access to money, in the same way that we have real-time access to everything these days, whether it's, Netflix or ordering an Uber, those kind of things. Like in the past, we may have, okay, I've got to wait till my show's on next Wednesday night to watch it. Now I want to watch it now. And I don't think it's any different to wages and salary. You've earned that money, you want it now. So early wage access is a pretty big product within the US today.
Yeah.
And then in addition, what we do at Salary Finance in terms of loans, salary deducted loans, is a slightly newer product, but that's growing in popularity as well, because sometimes borrowing from, or rather advancing your wages a week or so early doesn't fix everything. If I need to pay off a $10,000 credit card bill that's 30% a year, I don't have the wages to draw from to do that. So that's where we come in. Or if I have a medical bill, $3,000 for my son, who, I'd already hit the deductible, whatever it is, that's where this comes in. So yes, it's becoming much more popular. Employers are waking up very quickly to the fact they can help their employees in this way. It doesn't need to cost them money. It's just facilitating it and vetting solutions so that their employees don't make silly decisions and don't go to the bad guys, the wrong payday lenders out there.
Yeah. Wow. That's fascinating. That's interesting about the early access wages and getting money in real time instead of waiting every 2 weeks or every month. That's really fascinating.
Something else, Tim, sorry, is on savings. So typically employers will send all the money to your checking account. A very simple thing that's starting to happen now is, okay, I might send 90% to your checking account, but I'll send 10% to a savings account. And the day that you arrive and sign up and give us your bank details, you can give us two banks, your checking account and your saving account. Most pay systems allow for this. You can move your money in different places, or rather you can plant your salaries into bits of your salary into different accounts. So even that just takes the strain out, because most people know they should save, but the discipline of, okay, did I get paid today? Yes. Now I'll go in and I'll move 10% over to this account. We get busy, we miss it, we forget. So if you can do that at inception on basically hiring day, then suddenly it's like 401ks, automated sign up for 401ks. Half the time people don't even know what's in their 401k, and then they get a nice surprise at the end of the year. Oh, it's worth X, because they're just not seeing it on a day-to-day basis, and that makes things better for people.
That's very smart. I love that. I read David Bach's book, Automatic Millionaire, a long time ago, and he said people are just not disciplined enough to be able to do it. And so I have, every 2 weeks, I have a chunk of money being pulled out of my checking account and put into a savings account, and it feels like it's a car payment or something, and it's every 2 weeks, and I don't even think about it. And it's just disappears. And
exactly.
So,
and then you get used to not having that in your account, and you spend accordingly. The problem is not everybody's that disciplined, Tim. So I think employers can help with this. They can encourage it. And it's very similar to 401ks. If we left retirement planning to individuals, how many people would remember to move 5% or 10% of their salary each week, each month into a retirement account? Some would, but most wouldn't, because you get busy and
not regularly. It might be good for a month or two.
So the employer doing it for me and doing it before it hits my bank account means I can't get in the way of myself. And it's a very similar or identical principle when it comes to saving as well. Yeah.
The other challenge I always had was, I can't save enough for it to matter, so I won't save anything. $10 isn't going to make a difference. And I had to break that mindset too, and just get into the fact that it doesn't matter what you're saving. What matters is that you are saving.
And we see this a lot. It may be $10 a paycheck now, but then next year it's $11 because you got a little pay rise. The year after it's 12, and within a few years, suddenly that's a meaningful pot, and you have to start somewhere. So I agree. Sometimes people want the perfect solution on day one. That's not always possible, but just having that discipline is a really big thing.
Yeah, Very good. Wow. Dan, so much great information. How can people learn more about you and salary finance?
We're at salaryfinance.com. We typically help big employers, so 2,000 employees and above, that kind of size. In the future, we'll get down to smaller employers. We'll broaden out who we can help, but at the moment, it's at the larger end of the spectrum. So yeah, if you're working for a company and think that we should be helping you and your colleagues, then we'd love to hear from you.
Yeah. Outstanding. And all the links will be in our show notes. So Dan Macklin, thank you so much for being mesmerizing today. This was so good.
Thank you, Tim.
Hey, it's Tim. You ever wonder why so many talented, hardworking entrepreneurs and business owners struggle with inconsistent self-belief or high stress or procrastination or self-sabotage? Well, the answer may surprise you, and the solution is already inside of you. I've been searching for the answers to this for decades, and I found them, and I put it into a new program called The Power of Your Unconscious Mind, Mental Secrets for Accelerating Success. And because you're a listener, I want to give you a free VIP copy. Head over to powermindsetprogram.com. That's powermindsetprogram.com and grab your copy today.